What's up, everyone? All right, so I want to do a quick episode here on the Reddit IPO because I know that a lot of you guys have been asking about it, what my plans are, how I'm going to trade it, how I trade IPOs in general. So this is a good opportunity for me to walk you through how I trade IPOs and what my game plan is for Reddit. So first of all, we'll talk about IPOs high level. I trade IPOs all the time. Having said that, I am more excited about trading big IPOs. This episode I could probably do a whole class. Well, I have a whole class as part of the Warrior Pro curriculum. I could do a whole episode here on the details and the nitty gritties of trading IPOs, but we'll keep this a little bit more focused on Reddit. In any case, the way I trade IPOs is I don't try to accumulate a position or get shares assigned to me from my broker. Some people will do this, and some brokers will give you the option to buy shares like at the IPO price. Here's the funny thing. So right now they're pricing the IPO at $34 a share on Reddit, but it's possible that when it begins trading, we'll see the quotes on it at like $45 a share or something like that. It could start trading at a higher price, which means traders are so kind of like hyped up, they they buy it at a higher price because they just are excited to trade it. So that's very common on day one of an IPO. And the difference between the IPO price and then the price that it actually starts trading at is kind of interesting because the IPO price is what the underwriters price the shares at, and that's what the company gets. So they're pricing it at $34 a share. So that means the company is going to get $34 a share times the number of shares it sold. They're selling 22 million shares. So that means they're hoping to raise $748 million in this IPO. Now, 22 million share float is a pretty small float. If we compare that to some other IPOs, just in, I don't know, somewhat recent memory, Alibaba, 20 billion share float. That's a huge IPO, 20 billion shares. Let's see. What is, I'm trying to think about DoorDash. Is it just Dash? DoorDash, 312 million share. Airbnb, let's see. Airbnb, this float is 419 million shares. So to be honest, the fact that they're selling 22 million shares is kind of small. But in any case, so that's how many shares they're selling. But this values the company at 6.4 billion shares. I guess based on the total number of shares that have been issued. So this is down from the valuation in 2021, which was 10 billion. That was during a private funding round. So their valuation has dropped 40%, which is substantial. And I think that what I've heard is a lot of speculation about the fact that it's going to be hard for them to really monetize the platform in the same way that Facebook was able to monetize Facebook and Instagram and stuff like that. Anyway, so there's sort of some controversy there about the inherent value of Reddit is like it's a community forum, and when you start adding in ads, it just feels not authentic and not genuine, and people are concerned that it's going to really negatively impact the user experience to such a point that people would stop using it if they put in the number of ads they would need to make good money on it. So from an investment standpoint, I'm not interested in buying and holding any of these IPOs. That's not how I trade them. What usually happens with an IPO is, and I don't have the 5-minute chart available for these. These are too far back. But what often happens with an IPO is the first day tends to be red. This is very common that we IPO and we sell off for a couple days. Then what I like to do is look for the recent IPO breakout. So we get this pullback and then that squeeze back up. All right, so oops. So first we pop up, then we pull back, and then we squeeze back up. That's the recent IPO breakout right there, which I'm a big fan of. So for me, one of the issues with these IPOs is that you have people who got shares early and are going to cash out. And these aren't necessarily insiders. These are people who got shares because they went on to E-Trade and said, yeah, I want shares of the IPO. And E-Trade, Webull, Robinhood, some of these companies or brokers will get a certain block of shares that they can give out to their users who request them in advance. So there are people who will do that and then will hope that the IPO goes higher and jumps higher on that first day from what it was priced at, and then they take profit. So a little bit of profit taking, and then we can get that first move up. But you know what's really interesting? What's really interesting is often on the first day of trading, the chart looks like this on a 1 minute. It opens, it sells off a little bit, and then it rips back up. So the way I like to trade these when it comes to day trading is I look for the initial open and I'm watching the level 2 very closely. One of the things that may happen, and this is very common with IPOs, you'll pull the chart up for Reddit. It's RDDT, so that's going to be the ticker. So you'll pull the chart up, and obviously there'll be no chart. I don't even know if it'll load right here. It's just, well, it says no data. Obviously though, because it's not, it hasn't begun trading yet. But it'll just look like this. It'll be an empty chart, and you'll pull up your level 2 window, and I can pull that up, and it doesn't really matter, but just for the sake of argument, I'll pull it up here. And your level 2 window would also be empty. It would just look kind of like, oh, I can't, this is not working. Anyways, doesn't matter. It'd just be an empty level 2 window. So there'll be nothing there. So you're sitting, you're waiting, and they'll say, oh, it looks like it's going to IPO around 10 a.m. That's a lie. Expect it'll be like another hour and a half. It may be longer. Then 11. Then they say, oh, it's 11 a.m. Wow, it's still not IPO'd yet, but soon. We're thinking another 45 minutes. And they keep doing this. They keep saying it's going to be a little longer. It's going to be a little longer. And the reason this is happening is when a stock gets halted, and you know this for those of you guys who trade actively and have been in stocks that are halted. When a stock is halted, it usually resumes in 5 minutes. But sometimes it doesn't. Sometimes it takes longer to resume. It takes longer to resume generally when there's a large imbalance between the buyers and the sellers, right? That's when it takes longer. That's when it takes longer to resume. So with an IPO, when it's day one of beginning to trade, what often happens is it takes a long time for them to match all of the buyers with all of the sellers. Now, the people that have sell orders out are the people who got shares early, who are like, I'm ready to sell this thing as soon as this begins trading. So you've got the buyers, you've got the sellers, and it's just like everyone's just waiting. And then all of a sudden, they get matched up and trading begins. So when trading begins, what typically happens initially is all of a sudden, you're going to see million shares of volume go through instantaneously as this big batch of orders is matched. All the buyers and sellers are matched, and instantly like 2 million shares of volume will go through. It'll be a huge number of volume. And what usually then happens is the stock will drop. That almost always is what happens. I'm just going to draw out what this usually looks like. And sometimes the chart's not even loading because it's so much data happening so fast that we can't even pull up the chart. So when that's the case, what usually happens, and I'll just do this in blue, not that it really matters. I'm not going to change the color. I'm going to make this a big brush. So usually all of a sudden it opens and it might pop for a second, and then usually it drops. The price drops. And what I'm looking at is the level 2. I'm staring at the level 2. I'm not even usually looking at the chart because all of a sudden the level 2 is moving and it's moving so fast that I'm just focused on, the actual chart. I'm like, I don't have time to focus on the level 2. Sorry. I don't have time to focus on a chart. I'm just focusing on the level 2. So I'm looking at the price. I see that all of a sudden it starts trading. Let's say it's $34. And I'll see 34 go through, and then I'll see it drop down to 30, 33, to 32, to 31. And we get this quick drop. So I'm watching the level 2. I'm watching the price dropping. And then what I'm waiting for is the first sign of green on the tape. Now, on this right here, you can see there's red on the tape. But what I'm going to look for are those first orders of green. And when I see those first green orders, I'm going to punch the buy button. Now, usually I don't even have the chart fully loaded yet, but I know I'm getting in right there as soon as I see the green. Where am I going to set my stop? I'm going to set it below the pullback, which I don't know from the chart usually because I'm not looking at it, but I know from the price. So if we start at 34, I'll just make this 34. We drop down to 32, which is a 2-point drop. That's very, very plausible that could happen. Maybe even a little bit more than that. But yeah, some of the higher priced ones might drop 5, 6, 8 points, maybe 10. But this one, if it opens in the $30, $40 range, it won't. I don't think it'll be below 34. It might be 45 to 50. You never know. So it could drop maybe 4 points, maybe 5. Not usually. I haven't seen them drop into a halt down, and it would have to drop 10%. So that's probably not likely, but maybe a couple points. So it drops. I see the green on the tape. I press the buy button. Stop is 32. And this is what usually happens is we get an immediate squeeze back, and it breaks through the all-time high, which was the high right at the open. And then as it squeezes through this level, at that point, it's like, okay, what does this thing want to do? Usually, there will be a huge stack of sellers up here at the price that was the previous high, and they're usually right at the whole dollar. So all this might happen at different numbers, but this is what's probably going to happen. And again, it's just from my experience. I could be wrong. This could be an example of a stock that does something a little differently. And if it does, then I won't take the trade. But if it does what I expect, all of a sudden, it's going to start trading. We're going to see 2 million plus shares of volume go through, and the price is pretty much immediately going to drop. It might drop down to a whole dollar, like 32, maybe 31, drops down. And as soon as I see green on the tape, I'm going to jump in. And realistically, my stop at a minimum is 50 cents. It's not going to likely be realistic that I could have anything less than a 50-cent stop. The stop might even be $1 a share, depending on how volatile it is in that first minute. So I'm going to base my share size on knowing that I could risk 50 cents to $1 a share. So I'm going to take 10,000 shares? No, I don't want to risk $10,000. Now, you certainly could if you want to, if you're comfortable with that, because when this does a red to green move, I'm expecting a pretty big move to the upside, well over $1 a share, $2, maybe $3 a share. I'm going to see look for a push up higher, and then there's sort of two options. Option number one is I take it all off the table up here as it goes higher. Just take it off the table, lock up the profit for $1 to $2 a share versus a 50-cent stop. That could be a nice trade. Now with 2,000 shares, risking $1,000 to $2,000, I could take that trade down here with a starter, and then I could add another 2,000 shares up here as it breaks through the high and makes a new high of day. That would give me about 4,000 shares, roughly, down here. And if I get 2 points out of it, that could be $8,000 of profit on $1,000 of risk. So that's a nice profit to loss ratio. That would be a solid trade. I would be perfectly okay with doing that. That would be a 2,000 share starter, doubling the 4,000 shares and looking for $1 to $2 a share of profit. So once it squeezes up here, then we'll get a pullback. Now, sometimes these can be very volatile and it just will flush all the way back down to the low, which is what's scary. That's why you have to make sure you're paying yourself and you're taking your profit when you have it. And I don't know what this is where it's more of like just touch and go in the moment. I can't tell you definitively what it's going to do. But it could flush very quickly, and then all of a sudden your profit's gone. So that's why you got to take your profit when you have it. But if it holds, which means it sells, but there's a big buyer here accumulating shares, and it's not breaking. If there's a buyer accumulating shares and it does not break when it attempts to break, when it starts to sell off, if it does not break and it fails to break down, then that could also be a spot where I would buy the dip. Stop is basically right where that buyer is, and then I'd look for micro pullback for the next leg up. So that's kind of the way I trade these. The first move is basically like a red to green, little scalp, and it can be very volatile, 2, 3, 4 points, depending on what price it opens at. And then first pullback has to test and try to fail. If it can't fail, then I'm looking for a long for the next leg up. And then I could even do that for 2 or 3 legs to the upside. We've had some IPOs where on that first day, we do get some really serious volatility. A, B, and B. This one was a really volatile one on day one. If we look back on this chart, it really was. This had a big range. So this one opened. This opened right here at $146 a share, and squeezed up to a high of $165 a share. That's a 20-point move, just about. That was impressive. So we got a really nice squeeze on that one. Dash, what was the DoorDash IPO? This was another one that was really hyped up. This was in 2021. These two both were like really hyped up. So this one opened at $182 and squeezed basically straight to $195 a share, $17 a share. Really nice move. It then dropped to a low of 163 before closing at 189. And again, it did that kind of traditional sell-off before ripping back up. But then I had this was more of the daily chart. So those were two, somewhat recent IPOs. Let's see. And then, there are companies that IPO all the time. You can, for those that are interested, look at the NASDAQ IPO calendar. I'll just pull this up here. So this shows you upcoming IPOs, and you could see, there's a lot of them. Reddit, yeah, okay, this is a big one. 31 to 34, 22 million shares. So this is big, but there's small IPOs too. These companies are selling like 1.3 million shares, 2 million shares. This one's 100 million shares. So there's different size IPOs. We're getting IPOs all the time, but most of them are non-events. Now, the biggest problem with the Reddit IPO is the timing. And this is always a problem with IPOs. You sit and you wait and you wait and you wait and you wait. And while you're waiting, you have to be careful not to take trades out of boredom on other stocks that you might see if you're trading a little outside your typical range when you like to trade. I'm on my traveling trading station this week. And so I'm in St. Kitts in the Caribbean. And it's not really my goal to sit here all day long and try to time the Reddit IPO. I'm going to lose a lot of time on that. And I'll say that although that example I showed you of buying 2,000 shares, doubling to 4 and getting, $4,000 to $8,000 of profit, I love the sound of that. But I also know that there's times where I've had an IPO where I buy the dip, it pops up, and then there's a really big seller, and I'm like, get a little scared. I jump right out. It's like break-even trade because the spreads are big and it's jumping around. And then, maybe I get back in, it goes a little higher, and then it drops and I lose, and I'm like, gosh darn it, this is a waste of time. So I don't really want to have that happen here. So to be honest, I probably won't trade the Reddit IPO. I just don't think that it's going to work with my schedule this week, unfortunately. And for me, no one trade has the potential to move the needle for me, positively or negatively. I don't empower a trade to be able to blow up my account. I don't empower a trade to be able to make my annual goal in one trade. These are all just small trades. Hey, if I make a couple thousand, great. If I lose a couple thousand, no big deal. So I don't want to spend all day chasing, a trade like that. I'll come in tomorrow. I'll do my regular morning routine, and hopefully we see some nice opportunities during our traditional morning session. And if we do, then that's terrific. I'm going to be happy with that. No reason to overstay my welcome. I'll take the profit and I'll leave, same as I did today. I'll be happy for that. So if I was at home, I'd probably stick around to watch it, just because I like recording them and then having them saved in my archives for students. But and I'd probably trade it, but I don't really plan to tomorrow. So that's my plan personally. But I wanted to give you a breakdown of how I do trade these in general and what I would be looking for if I was going to trade it. And I hope that gives you an idea of what you could look for as you watch the IPO tomorrow. I would also remind you that at the moment of IPO, because there's so many shares going through and so much volume, everything is going to lag. Your charts are going to lag. Your level 2 might lag. So, if you're trying to do other stuff on your computer, that could slow down your computer, because all of a sudden you're going to get just a massive stream of data all at once. And that can affect performance. And that could delay your data, and then you're getting delayed quotes. So make sure your computer is, restart your computer. Don't run it too heavy tomorrow if you're planning on trading during the IPO. So when all that data starts coming through, you're able to handle it. And if you try to trade, you're on real-time data, not on delayed data. I mean, even delayed by just a couple seconds can be a problem when these are very, very volatile. So anyway, so manage your risk. I hope you guys, if you do trade it, I hope that it's a clean IPO. I hope we get some great opportunities. It's always nice when we do. Reddit is a little bit, Facebook, Twitter, Reddit, I don't know. I'm not really that excited about it personally. Doesn't mean I wouldn't trade it, but I don't know that this is going to be a, incredibly successful, profitable company like some of the others have become. So we'll see. Anyways, I hope you guys found this helpful. A reminder, as always, manage your risk, trade cautiously. My results are typical, and I'll see you back at it first thing tomorrow morning.